Hello and welcome to today's Delta Credit Tip. So you're trying to get a mortgage and you discover that your child that you co-signed that car for, well, they weren't exactly paying that bill on time, and now it's an obstacle in you getting a mortgage. What do? Well, first, smack them on the back of the head for not making the payments on time, then tune back in because we're going to have a solution for you right here on today's Delta Credit Tip. Hello and welcome back to today's Delta Credit Tip. So you're trying to get a mortgage, you go to the lender, they pull your credit, and there's that car note that you co-signed for your favorite child, all red with late pays. What are you gonna do? Because lenders don't like to see any late pays in the last at least 12 months of your application. Well, the secret to that is understanding that being lendable is different than having good credit. You can walk into a loan officer's office with an 800 credit score and still get declined for a loan. Just like you can walk into a mortgage office with a bankruptcy on your credit report and still get a mortgage. Okay? Being lendable and having good credit are two different things. And the key to getting a loan is not only having good credit, but understanding the requirements of being lendable. What are the guidelines of the loan? Whenever we get a client in, the first thing we do is we contact the lender. Why? Because they hold the key to the success of the client. We want to know what they want, and we will customize to that. Right? So having an open line of communication with your lender is a big deal. And that's why I really like to do things locally, not over the phone, not over the internet. You want someone that you can have a conversation with and kind of go over some stuff, right? So like in this situation, you've got all these late pays on your credit report from this co-signed car that you signed for. What are you going to do? Well, if you're working with a lender, that lender could then approach the underwriter. The underwriter is the one that actually ultimately makes the decision on your loan. The lender, the loan officer that you're talking to, they're really a painter, right? What they're doing is they're painting a picture for the underwriter to convince them that you are within the risk tolerance of that lender. Okay? Now, one thing that your lender can do is paint the picture that really you're not the one responsible for this bill. How do you do that? Well, if you're going to co-sign for a car note for your child, you want to make sure that the child is making the payments in a way that leaves a paper trail. And that paper trail needs to come from an account that is strictly owned by that child. Or I mean, they can have a co-signer on the account, but it can't be you, right? You need to be nowhere on the account that the payments are coming from. If you can show the lender and then underwriter that the last 12 consecutive payments came out of an account owned by the child, then more often than not, they will excuse that trade line. It won't affect your score, but it will affect your debt to income ratios and whether or not you meet those requirements because of these late pays that happen to be on your credit report. Okay? The key is making sure that the child is not paying for the car in cash or money orders. You should never, ever, ever do that with cash or money orders ever because there's no paper trail or proof that you made the payment. Money orders carry no proof with them whatsoever because you can't track them back to the dollar amount and the source of the money. So make sure that they're using either online bill pay, writing a check, using a debit card, an ACH transaction, something that shows that that money came out of the account. So when they pull 12 months worth of history of that bank account, they can see that car payment coming out and they will absolve you of it. Okay? Big, huge caveat here, right? Just because you can convince a lender that that money is coming out of their account and that you're not really responsible for that bill, A debt collector is not going to follow the same path, okay? You cannot convince a debt collector because the money's been coming out of your child's account that you're not responsible. You are 100% responsible for that bill, regardless of what the underwriter said. So if the child does default and the car gets repoed, you are still responsible for that car. If your child files bankruptcy, you are still responsible for that car. If your child pays everything but the car, you still owe the money for that car. So think about that before you co-sign, that no matter what happens, you are 100% ultimately responsible for that vehicle. Okay? One last thing I want to mention about the car. If you are going to co-sign for your child and you don't foresee needing credit during the duration of the time that you are co-signing the vehicle, okay? Specifically a mortgage. If you've got a house and it's really not that big of a deal, what I always recommend is that if you're gonna co-sign for the child, have the child pay you and then you pay the lender. Why? That way you know the payment is there. And if they don't pay you, you know something's wrong, right? And you can make sure that you're protecting your own credit by paying that bill or making that child sell that debt. In other words, sell the asset, sell the car, so that then the bleeding stops and you can stop dishing money out every month because they can't make the payment. All right? So I hope this information helps. If it does, give me a please big thumbs up and also subscribe below. Every Thursday at noon, we'll be trying to bring out more information every week that helps you with your credit restoration process. Most importantly, share, because this is how we become informed. This is how we beat the system. But more importantly, this is how we make a choice, make a change. Delta.